Now, today I'm going to start a series on, investing, especially for beginners. Now, if you're a beginner, guys, it's good that you're here. I'm going to teach you as much as I can and try to get cover as much as I can. So kind of going to start with how many types of investors there are. There are multiple types of investors. There are day traders, dividend capturers, swing traders, and long-term investors. So if you're new to investing, I do recommend you guys using Robinhood. Robinhood is a free stock trading application that allows you to trade stocks without any fees. It doesn't require a minimum deposit. You could actually have $5 in the account and still have the account. So that's why I really like it. Now, guys, if you're new to investing, you have to understand that there are, different kinds of investors. There are people that day trade. There are people that, swing trade. There are people that, long-term invest like I am. I'm a long-term investor. I do day trade, but, those are different methods that I use in different portfolios. And then there are people that do dividend captures. And I'm going to talk about some of them, not get into depth, but kind of give you a brief explanation so this video won't be too long. Now, in Robinhood, you can't not day trade unless you have a $25,000 limit. If you have $25,000 in your account, then you can day trade. But I don't recommend it if you're a new investor just because you don't know what you're doing yet. Eventually, you can jump into it, but I do recommend you guys start slow and get the market first before you do day trade. Now, what swing traders are, kind of going to explain over here. I'm going to explain with Ford real quick. Let's look at the week process. So let me give you an example. So what you try to do here with swing trading is that you try to buy at a low. So you start, let's say you start off Monday, you buy here, and then you're waiting for it to go up and sell here. And then when it drops again, you're going to buy, and then when you reach a certain peak, you're going to sell. It drops again, you buy, it goes up again, and you sell. And this happens within like a day's process. I mean, like 2 or 3 days. This is what you do throughout the week. That's what swing trading is. Day trading is a very, very similar process. But as you see, this was a week. Now this is a day. The way you do it in day trade is pretty much buying at a low point and selling at a high point. And this could happen within 5 minutes or so. So every time you go at a low point, you buy and then you sell at a high point. Now the way you do it in day trading is that you always find a baseline. So whenever it drops, when it usually drops, that's where you buy. It's eventually going to peak up, especially a stock like this that jumps up and down a lot. But the way you kind of see it is that you try to find a base where to buy. So as you see here, there's always a pattern. Every time it drops down, you should buy around these areas and sell at these areas. So as you see, it has a pattern that it always has. As you see, these are places where you want to buy and these are places where you want to sell. And what day traders do here is that they, let's say, buy 100 stocks at this point and then they sell all those 100 stocks at that point. Or there's different methods of doing it, and people have many methods of doing it. So that's pretty much what day trading is. Now, long-term investors, which I am a long-term investor, is pretty much you buy stocks and hold them for the long term. And stocks like, let's say, Ford, an example again, as you see here, it does have a dividend. Now, these pay a dividend, guys. This is a payout ratio, and this is what it pays for having it quarterly. So every 3 months you get this much back, which tends to be about, sometimes it's 15 cents per stock. So that's what dividends are. Dividends is the company paying you back a certain percentage for keeping the stock. Now, dividend captures is a very similar thing. It's just whenever they have an ex-dividend date, which, let's say Ford's ex-dividend date was on the 30th of this month. If you have the stock in this month, then, in this day, then you're going to get paid that dividend. And and then you could just sell it off. So the next day, the 31st, you can sell, and then you'll still get the dividend. And that's what dividend capturers do. They try to find the ex-dividend dates, the days that they're gonna put the dividend, and then they sell out the next day so they can capture the dividend, and then they could just keep doing that with all the other stocks. So if I move too fast, feel free to ask questions. Again, one thing I do want to kind of say to new investors is that you have to be patient. I do recommend new investors to kind of either swing trade or do long-term investments. And one stock I do want to recommend for new investors is Ford. And the reason is because it's a fairly cheap stock that pays a good steady dividend. Now, they don't increase their dividends, but they're constant with their dividends, and they do give out special dividends, which means that they do pay you a little bit more every time that they do good. So as you see here, every time they do good, they pay a next special dividend, which means that the dividend is higher. So as you see here, it tells you that it pays you a certain dividend, and I've bought it before. As you see here, Ford paid me a $2 dividend that time. And yeah, they return pretty much money back for having their stock. And the reason I do recommend Ford, guys, is because I guess, like I said, if you're new to investing, then Ford is a fairly cheap stock that pays a good dividend. Now, again, new investors, don't panic if you see red. A lot of people think that, oh, hey, I lost some money, I need to sell out. Don't, guys. Be patient. As you see here, I've lost $1.40 with Coca-Cola, but it doesn't matter. I'm going to get that back in dividends, and eventually the stock is going to go up. Now, there are many different types of stocks out there. There are many different kinds of stocks, and I will get into that eventually, but I wanted to kind of take it slow for you guys. So there's dividend champions, dividend aristocrats. I mean, not dividend, stock aristocrats, there's champions, there's blue chips, there's many types of stocks out there. And again, like Ford, Apple, these are all blue chips, but some of these are champions. Like Coke is a champion. It's which means that this is a company that's paid a dividend and is going to keep paying a dividend, and it's going to keep growing because it's a huge company that most likely is never going to pretty much die out. It can, but it's hard for this company to collapse and die out. Same thing with Apple, and same thing with Microsoft, and same thing with Ford. They've been there for a really long time, and they look like they're going to stay there for a long time. So for me, that's my method. I buy into stocks that have a dividend and know that are going to have growth. And for me, again, I don't see a red being a problem. You guys have to have that mentality and that that patience and discipline to see it. Oh my gosh, I'm losing $1. Oh my god, I need to sell out. Don't. You only lose money when you sell. If you don't, eventually it's going to come back up and you're going to make money. So again, before you buy a stock, do your research. I know there's people that have thousands of stocks or hundreds of stocks. They buy one stock of this, one stock of that, one stock of that. And again, that's not my method. My method is, buying less than 5 stocks. I have 4 stocks that I know so much about that I can keep track. So if one is collapsing, I know when to sell, when to, do my method. But again, everybody has their own method, but I feel this has worked for me. I have made a lot of money this way. And I feel like you can too, but you just have to follow these steps and be disciplined. Pretty much when you see a stock going down, like as you see today, that I did with Apple. Now guys, this is not my main portfolio, so this is just a portfolio that I have here on the side to kind of show you guys. I do have a bigger portfolio, which I will be showing eventually. As the videos progress and hopefully as the channel grows. But as you see, once I saw Apple kind of decline, as you see down here, I bought into it. Instead of selling and seeing that, oh, I am losing money, no, I ended up buying more. And that's my method. If I'm going to buy long-term stocks, I'm going to try to buy whenever they're down. So I actually kind of get excited when the stock drops because it's kind of saying like, hey, it's pretty much on a discount, So that's when I buy more. Instead of selling, I buy more at that price so I can average my total return and kind of buy more of that stock for a cheaper price. And that's the way I see it. I don't have to be making money all the time because I know in the future, these stocks are going to produce so much more for me. So, um, that's pretty much all the information I kind of want to give out right now. I don't want to kind of, throw so much information out there. If there's something you didn't get, please feel free to ask questions. If you don't have Robinhood, I think you guys should jump into Robinhood, and I'll leave a link down in the description, where you can apply. And if you use the link down in the description below, you can get a free stock, and I can get a free stock. So